How's it, guys? Welcome back to FX Rhapsody. Today I wanted to show you or share with you my 3 rules when it comes to trading currencies. But before we go to that, just go visit my website. I've got all my previous analysis on the website. I've also got COT reports that I've updated over the weekend that you can use. If you watch my analysis, you just go download those COT reports. And there's lots more on that website that will keep you busy. And if you, depending on your trading experience, it will surely benefit you in your trading. Okay, let's hit the chart. So, like I said, I've got 3 rules when it comes to trading currencies. So, the first one is I would always wait until there's a break in structure. Then, number 2, I will pull out my Fibonacci. Number 3, I will wait patiently for that retracement and then I will trade it. Simple as that. Break of structure, Fibonacci, and then wait for that retracement and then I trade it. There's obviously all the other things in between, but those are the 3 main rules that I look at when I trade. Now, I'm just going to show you 3 trades for this week, or 3 setups doing this or using these rules. And this is, for those of you that's been watching my videos, this is basically how I do all my trading on the currencies. And I'm not saying this is how you should trade. Again, I'm not licensed to tell you how to trade and all that. I'm just saying this is how I do it. You can follow suit, but please test whatever I show you. Test it on a demo account first. Use proper risk management, and please don't be greedy. Those are 3 things that I need you to do before you go into a live account. Master those things. Use proper risk. Please don't be greedy, especially when it comes to trading. You will find yourself losing all your money. All right, let's start off with the euro. This is not handpicked or anything. I mean, this is analysis that I do. In actual fact, all 3 pairs that I'm showing you has gone actually against my analysis that I did this weekend. So this is just again showing you, excuse me, you can do your analysis on a pair. But please, whenever you do analysis, whenever you watch my analysis as well, I'm just saying to you and I'm showing you what I think might happen in the market because it's analysis. I'm not saying that is exactly what's going to happen. I personally trade what the market gives me. So when it comes to analysis, you do your own analysis if you want to, or whatever the situation, but never be biased towards a trade or a trend or your analysis. If you do your analysis over the weekend, or if you see my analysis and I say to you, Euro USD is going to be a buy when it hits that level, do not keep me to that. Do not keep yourself to that. Do not be biased to that. Rather react to what the market gives you. That's what I'm saying. 3 rules. Break of structure, Fibonacci, wait for that retracement. Okay? So let me show you. Break of structure. So structure, where do we find structure in this pair this week? So just going to draw a little line here, around about there. Let's not going to be exact, but this is where the week started. So everything on this side, this is where the week started. So just keep that in mind. So we had a structure. Now this for me is a structure. So let's do it like that. Okay. I'm just going to do it right out to there. You can see that market came down, or price came down to this point. Did not close below or beyond that point. Came up and then market started. Market broke above it and then tested it again. So that structure didn't break. It eventually broke, came up, retested, broke above it, came back, retesting it, came down, coming up. So you can see that's an area of structure. So let's move that sideways. So now we can see the week started. Eventually, it did not break through the structure. It was still above the structure. And then once market broke through that structure, now my analysis, what I said is price is going to move to the upside. Okay, so don't be biased to that. I saw structure being broken. So what happens when structure gets broken? And the rule number 2, take my Fibonacci, from this swing from here. So there's my swing high over there, and this is my swing low. As you can see, I'm just drawing it or pulling it sideways. So you have my swing high to the swing low. That is how I trade my Fibonacci. For those of you that haven't watched it, put a link on the top there at the end of the video. Go watch it. So you can see Fibonacci pulling up, price going back. Rule number 3, wait for retracement. So structure has been broken. I'm just going to take structure out there. Bam. We have a clearer view. So now we have the Fibonacci in play. Now what we do is we wait for retracement. Retracement is always between 62 and 79%. Where does that happen? First over here. So place your trade right on the 62%. And when you place your trade right there, that is what I do. And stop loss just above the 100. Okay. 27 pips, 27.5 pips stop loss. And first take profit will be 39, let's say 40 pips. That's first take profit. Second take profit, which is currently running to 72%. So basically, take your trade right there, and then it starts moving down. Came back to retest it a little bit, but then it starts moving down. That is your first example. Second example, let's go to another pair I analyze every weekend, GBP USD. So on the British pound, US dollar, again, this is not handpicked, guys. I'm not going back into time or back and saying, oh, this happened here. I mean, this happens every week, right? So just like I said, practice. Practice always makes perfect. The more you see it in the market, the more your mind will react to when it happens. Okay, that is just as simple as that. So the week started again. Let's just draw this little line here, around about there. Okay, everything past this line. This is the new week, Monday, Tuesday, Wednesday, and so forth. Okay, analysis that I did over the weekend. I said price is gonna skyrocket, or price is gonna move to the upside. So again, what do we see? We have a structure over here. So I'm actually gonna just draw that there. Okay, just like that. Okay, so you agree with me? This is structure. This happened last week. So price came down, didn't break through it, came back, pulled back, just broke or just closed above that. So it formed a structure. So second touch, coming up, retesting it, price hovering above it, coming down, retesting it, closed above it, not breaking it, hovering. And then what happened this week? Price broke below structure, just moving it sideways. So that is rule number 1. Wait until price breaks structure. What then? Then you take your Fibonacci out. Now, let's say you pull your Fibonacci out here. From that swing to that swing. Okay, swing high, swing low. What do you see? Price not pulling back to the 62% to 79%. So that's rule number 3. Wait for retracement. So now you see price moving down again. So now you delete your Fibonacci because now it's formed a new swing high at the top. So that is a swing high before we pull out the Fibonacci. So price went up, came down, retraced, not to the 50%, not to the 62%. It wasn't even close, but it moved down again. So now it formed a new swing high and a new swing low. So we're waiting for a new retracement. So let's just expand this a little bit. So now swing high at the top, swing low at the bottom. So you get the swing high and you get your swing low. So what happens? You wait for retracement. Rule number 3. Bam. Right there. And you pull, place your trade, trade runs. Currently it's on, let's say 63, just past 60 odd pips. Okay. It's as easy as that, guys. 3 rules. That's all. Let's do another one. Let's go to what else do I up? USD JPY. UJ. What happened here this week? So where did the price open? Where did the market open? Right about here. So anything past this, it's new week. This was last week. Okay, I'm just minimizing it a little bit just to get the structure. So before we take that out, let's first find the structure. Now for me, because like I said, let's say this did not happen. I mean, we find the structure first because we need the structure to be broken. So for me, this is a good structure. I'm going to pull it and I'll show you how. Not how, why. Sorry. Always okay. There we go. So you can see this price going up, coming, retesting that area right there on that with that bearish candle. Pulling up, price breaking that structure, coming back, retesting it, then retesting it again. So now we have two retests on that structure. Okay, price not breaking past it or through it to the upside. Now price hovering down, coming up, and what happens? First thing this week, price breaks that structure. So price starts moving to the upside and it forms a swing low. So a swing high. Again, here we go. Another example. So this is your swing low over here. Oop, right there. So let's say you had your swing high on this one. You can see price retracing down. Not even close. Leave your swing low at the bottom. Wait for the next one. Just move it up slightly so you can see. Just right there. And just right there. So you can see price going up, forming that swing high, coming down. So what are we waiting for? Let's take that out. Rule number 3, we're waiting for retracement to the Fibonacci, and bam. Let's pull out the buy tool for change. Look at that. Sitting on 98 pips. Almost 100. With a 43 pip stop loss. 3 rules, guys. 3 rules. That's all it takes. Break of structure. So identify that structure. It needs to break it. You pull out your Fibonacci and you wait for retracement. Wait for retracement. Be patient. That's all it needs to be. So, hope you guys enjoyed that. Share your thoughts. For those of you that haven't seen my video on the Fibonacci and how I trade it, link will be on the top here. And also just go back on my analysis videos, and you can also go back every week. I do a little bit of entries for the week, and you will see this is basically what happens every single week, in and out, day in and week in, week out, and especially on these pairs. So guys, hope you enjoy this. Hope you're having a pipful week. Stay safe and happy trading, guys.